What's going on? What a week, right? What a week. So glad everybody can join me. As usual, let's get started here. All trading involves a substantial risk of loss. Anything I talk about, you gotta remember, past performance does not necessarily indicate any kind of future results. This presentation right here is informational, educational, and fun. Is not a recommendation to buy or sell anything. If you desire that personal financial advice, hire and consult a financial advisor. And let's jump into what happened today, shall we? So, jumping over here to the heat map. Nice alert on boot. We can see that it's kind of a mixed bag. A lot of flat, a lot of gray in there. We turn off the gray, a bit of red, and we can turn off all the red and see what the gainers were. Yeah, tech looks like a pretty big winner today. All over the place. So, not too bad. And we are only in YouTube today, so if you got something to ask me, something to tell me, go ahead and shoot me some chat there. I'll be glad to talk to you. So I brought a little bit of something fun to talk about, something a little different. So we'll start out with a few things off of Zero Hedge. Zero Hedge is like a news aggregator. They do publish some stuff, but I look at it more from the standpoint of news aggregation more than I do like original stories. So one of the things here, don't forget that we are at a low in the VIX seasonality for 2023. This is average of 20 years right here. You want to zoom it up a little bit. Here we go. So we're at that low point. We can expect a volatility spike into February, then another decline. The declines are usually correspond to a market rally. Spikes usually correspond with a market drop. It's just kind of the way it happens. So be prepared seasonality-wise. We could see a little bit of chop in the market, causing some increased volatility. Then mid-February, a nice drop. Then March, whoa, baby. Of course, this does include 2020, which was the mother of all volatilities. If you took that out, I'm not sure that we would see quite this spike in March, but it's there. I'm going to be glancing over this way just a little bit, just to check on the chat occasionally. And then sell in May and go away. Things get kind of boring May, June, July, and then things pick back up into the end of the year. So October, usually seeing a pullback historically. And then we get the rally toward the end of the year, which causes volatility to drop back. All right, any questions on that one before we move on? Now, what is behind the soaring gold prices, right? Like, what is causing gold to go crazy the last few days? Well, it looks like China has acquired about 100 tons of gold. And we're not talking about ounces, we're talking about tons. Now, there's a lot of ounces in a ton. So they have acquired some blocks, 32 metric tons in November, another 30 metric tons in December, and just recently, like another 35 metric tons in January. And we've only been at this 2 weeks now. And this article speculates that China and Russia are kind of colluding to launch a gold-backed monetary, dollar, almost like a dollar, a gold-backed money for transactions. So this is interesting. Might it happen? Might it not? I'm not sure. They're going to take on the dollar and try to decouple us as the world reserve currency. So the dollar's had its day in the sun. Typically, a world currency only lasts about 100 to 150 years, and we're right at that 100-year mark for the dollar. So we could be on a decline at this point. Takes away a lot of our power, as we'll talk about some of the other things here. Pelosi, world's greatest trader, taking some losses in Tesla, Salesforce, PayPal. Right here, some of her losses. Half million in Tesla, about 700,000 in Salesforce, about 854,000 on PayPal. So nice big hits. She also took some smaller losses in Roblox, Netflix, Disney, and AllianceBernstein. That's almost a break even for her, right? Interestingly, Pelosi also sold $2.6 million worth of Alphabet and didn't really have any details on whether it was a gain or a loss. So Here's the periodic transaction report she filed. So, even Nancy Pelosi got hit a little bit in 2022. So, being Speaker of the House didn't help her there. So, anyway, Janet Yellen warns that the U.S. debt limit is going to get hit next Thursday. Now, we do have a holiday on Monday, don't forget, but that's not going to stop the debt from hitting. So, this is kind of a big deal here. And we can float along until June. They can start implementing extraordinary measures while Congress debates how they're going to raise the debt ceiling. But we're going to hit the wall and start defaulting somewhere around June. And this is for the U.S. I live in the U.S. I kind of follow this stuff, and I trade the U.S. markets. So what is this going to do? Well, I don't know yet. I'm going to keep an eye on it and try to kind of fill it out. We've got a couple months between now and June, but that cross on, let's just pop over and talk about it. Let's see. Jump over here, go to load layout, go to my interest rates. So right here, this chart, when it loads up, when these two cross, which they look like they're on a path to cross here. This is the Fed funds rate versus the market 2-year treasury rate. When these two cross, we usually have about 100 to 120 days before a financial crisis develops in the market. Why, where do I come up with that? Well, it happened here. It happened right back over here in 2007-8. Happened right back over here in 2000. So all these major financial crises of my lifetime, my trader lifetime, have been when these two cross. And it sure does look like they're about to cross again. So be careful, be cautious. This could be coming down the road here. And see, when I say takes 100 to 120 days, that's where we get this flat at the top in the Fed funds rate before the real crap starts hitting the fan. They start cutting rates, trying to repair the market. So somewhere around 100 to 120 days, that's what we'll have whenever this does, in fact, actually cross. Come on there. Love that. There we go. Undid. All right. So let's jump back over to S&P 500. Now, big news, big news. We have it closed at a higher high. Yay, right? Like, that's what I've been waiting for. That's what I've been looking for. This thing is back above the roadmap line, confirming with 2 days so far. We need to get some more continuation on Tuesday, but right now we are on the path. This big blue arrow I drew is going to take us back up into this resistance zone right here. And then once we can break through that, then we can zoom on out and get our move up here, probably retest the prior all-time high, get a little retrace, and then break out further. Now, this may take us out to June, July, and just hitting 5,000 could be it. We may get a blow off top. It may go exponential on us, get up to 5,500 or so, but watch out, that next financial crisis might be happening. So that can be down the pipe here. So we got to be careful and watch out. What does that mean in the near term? Right now, I'm pretty bullish. I'm thinking we're going to hit right up in here. And where did my other... Let's pop back over here really quickly. Oh. So one thing I popped on here right before the market closed, this right here. Check this out. This is my retirement account for me and the boss, my wife. Just 3 of the accounts out of like 14 I trade, 15, 16, I don't know. It's a crazy number of accounts I trade. But today, up $2,500 and 11,700 in the first 2 weeks of 2023. That's looking pretty sweet. If I can keep that up another, do that just 26 more times, right? The rest of the 52 weeks, 2 weeks times 26, 52. If we can do that and keep it up, then 2023 is going to be a pretty banging year. So glad you're on my side, and let's keep on getting it, right? So what do we expect from next week? Let's jump back over there really quickly. Load up the calendar for next week. That would be the 16th. And I want the whole week, not just the day. Let's see. Not the day. Give me the week. Here we go. Next week. We have coming up Monday, a holiday, of course. Tuesday, we've got some Canadian numbers, U.S. Empire State Manufacturing. We've got Wednesday, core PPI. Now, this can be a market mover right here. So we got to watch that number coming out on Wednesday. Thursday, pretty bland. Friday, another pretty bland day for U.S. numbers. Then the next week, this is where the big fireworks are going to come in. Excuse me, the week after that is not where the big fireworks come in. It's the week after that. So we're back to normal after next week. And next week, holiday week. Then we have a normal week. Then we have an FOMC week. So we're not even going to be back to normal until like after that for February. So, and just looking through here, if you're unfamiliar on how to get this, go to forexfactory.com. Just Forex, F-O-R-E-X, factory, F-A-C-T-O-R-Y.com, and click on the calendar button. And you can pull this thing up, and it has most of the economic news from around the world. And like for the CPI that we got yesterday, let's pop back up, go back one more week. We can scroll down here, and when they publish the numbers, it'll tell you, you kind of have to look at actual, forecast, and previous. So you can see that the actual report is 6.5%, the forecast was 6.5%, and the previous was 7.1%. So nice pullback in the inflation. That's mostly on the back of like housing and used cars and stuff like that dropping like crazy, and a little bit of gasoline prices pulling back. So looking at a few other things here before we wrap this up for the week and enjoy our long weekends, right? Yes, looking strong, still not quite above the roadmap line, solidly. We had that pullback and chop right in there. Didn't really close at a higher high on the futures here. So this is a little tiny bit of caution. We do have this consolidation box that we're probably trying to work through where it chopped all up through here. So once we get back above about 40.50, we should be pretty smooth sailing up to that 41.50 at least, if not all the way up to 4,300 where we topped out back here in August. So that's the futures. Why futures? Well, they trade almost 24, 24.5, I guess, and 23.5. They open on Sunday nights typically. This week, not so much, but they'll be open Monday night about 6 p.m. and then they'll close up Friday at 5, which they're still open right now, but I don't think we're gonna make any kind of major move here before we shut down for the weekend. Nasdaq just into this consolidation box, just poking in. Like, this is positive. This was a higher high on Nasdaq, so this is a positive sign that tech is going to catch up. Tech has been lagging. Tech has the opportunity to catch up. I just did a synthetic stock thing on Apple, AAPL. Come on now, keyboard, AAPL. Right here, I did a synthetic stock on Apple. And what does that mean? Well, I went to the at the money, bought a call, sold a put, and then bought a protective put at, let's see, at the time, Apple's trading around 135. It looks like it closed around 135, so pretty close. So I bought a 135 call out to March. I hopped out a couple months, sold the 135 put out to March, and then I dropped down to 120 and bought a put, a protective put, to limit my risk on the downside. Now, that got me in the trade for about $156. Whereas if I just bought one share, that's $135, $134.55 at the close, it looks like. So I was able to get the leverage of 100 shares by just spending a little bit more than one share's worth of money. Now, the risk on that is the difference in the strikes. So 135 minus 20, that's $15, plus the charge, the 156 that it cost me to get in that trade. So it's actually $16.56 was the risk, multiplied by 100, so that's $1,656 risk. So the risk is a little higher than just one share. You know, one share, you buy it, your risk is 134. So my risk is a little higher, but I also get that leverage of if it moves up, then that profit there is multiplied by 100. Now, target for this trade, do this 3-point tool right here, about 146 is my target. I'm just looking for what I did. This move up right here, take it and copy it and paste it and move it right over here. That's what that red line represents. About 146 is my target. So right now, looking for that move right there in Apple one more time. It's a classic echo trade type thing. Looking for the same type move to happen again. That also puts it right at the roadmap line at this point. So that explains that trade for anybody in Discord that came and joined me and was wondering what the deal is there. That's kind of the deal right there on Apple. All right, not looking for crazy extra moves, and I was out to March, so we got a little bit of time. And this thing was on a tear today, so nice move. Another nice mover, boot. Look at that, right up through the target, into the close. First target. Now, I don't. These fibs are projecting off the first move up, second move up. Typically, if you have taken my fib class, you'll do a retracement and do a target. See, it's right there. We were hitting the second, hitting that, actually the stretch goal target, the $75, which just happened to correspond with the 100% there. So coming in right there. And then we have a $80 extension goal and then an 85 extension goal. So I'm riding that with a spread and with some calls, looking for this move to keep on going. Now, I am cautious that we see a bounce down at 80 and return to the roadmap line here. So cautious on that one. I'll be looking to book some profit, probably protect some profit on that one. All right. Next up, oil. Looking strong. Still has not broken out of this downtrend though. Looking strong, looking strong. We start getting a move up through 81. I'll be able to update you on Tuesday. After the close, we'll do regular 30 minutes awesome. I'll update it there. But that one's looking super strong. Gasoline actually looking even stronger, getting a higher high here. We'll be coming up on the roadmap line at 260. This thing could break out and put some pain on the U.S. consumer here if we start breaking out higher than the roadmap line. So got my eyes on that one. Natural gas, totally sucking it up. Going to extend down to this $3 zone. And gold right there breaking out above that resistance. Like I said, where is gold headed? Well, let's run a fib from the highest high to the lowest low right down here. And it looks like we're moving up through that resistance zone. So this is the entry for gold. Potentially, as long as we don't get a huge pullback on Tuesday. I was expecting something to pull back to the roadmap line. Not happening, obviously. So this is just going to go on a tear. And somewhere around 2200 would be my first target, assuming that we don't slow down at the prior high. And then 2370-ish, 2360, 2370. It's going to be the upside after that. So I'm going to go ahead and draw my target right up here. This is where I primarily expect gold to head to. And we're probably going to take, looking at this, look at the speed of this projection so far, it's probably going to take out to April, May, if it's going to just rip up there. So, all right. And finally, the big news of the week is crypto finally started moving a little bit. We came right up into the roadmap line. If you're interested in the roadmap line and what it is, I have a YouTube video I did last week. I think it was maybe 2 weeks ago. You can go watch that. And there's a link in the description if you want to go jump on it. It'll get you in my Discord, and we can chat about this stuff all the time. But right there, closing right in, looks like it's going to close the day right in the roadmap line. We need to get above that, get above this consolidation right over here. Yeah, I mentioned to my crypto power plays people that we're probably going to push right up through the red zone quickly. We did that. Looks like we're going to push right up through the yellow or the orangey zone quickly, and then potentially get right up through the roadmap line. And really, things don't get super spicy until we're above this high we made back here in August, around 25,000. and all the miners like start looking really good if we can get back into the mid 30s, because all of their financial calculations and stuff were based on Bitcoin being in the mid 30s, around 35,000. Once we broke below that, they all started being hurting, and you can see that in Mara, Riot, Hut. A lot of those charts, Hive, just pull up those charts and look at how bad they've been doing since Bitcoin broke below 30,000. Now, if we can get back above that, things are going to get really spicy, and we've got a catalyst that I'm going to talk about next week during some live sessions, so make sure you're up on everything for me. We'll be throwing out notices and emails like crazy about this live event I'm going to talk about next week. So, love to have everybody. Thanks for coming. That's going to wrap it up for this week, the second week of 2023. Hopefully we can keep going at it, get some more stuff. Yeah, if you got more questions, come talk to me in Discord. And otherwise, I'll be back at YouTube next week. 30 minutes awesome. Thanks for coming, everybody. We'll see you around. Bye for now.